Okay then, guys. So we're going to start now. Hopefully some more people will join us shortly. So good afternoon and welcome to today's live coaching. I am your coach, moderator, whatever you like to call me for today. My name's Jack. For those of you who have attended before, you'll know a little bit about this. Who haven't, I will start with something very just quick so that you can get to know me a little bit. My name's Jack. Come from a family of traders. Worked in City of London for about 4 years, but have traded professionally in Gibraltar for institutions for the other sort of 4 years of my career. So I've traded in total for about 8 years. I've traded at funds. I've traded at a proprietary firm. I've also traded sort of my own book as well. And done some analyst work. So pretty much I've done it all, seen it all, traded it all, any sort of event you can imagine. So I started around sort of 2006, 2007. Pretty much asset classes, traded a lot of Forex now, but honed my skills trading bonds and commodities, a bit of stock indices, but now pretty much have leveraged that to trade upwards of 40 different markets. And hopefully, if you've attended my sessions in the past, you've got a little bit of insight into sort of how I trade and what I look to do. I do a little bit of consultancy as well. As you know, this is in association with Trademo. I've got a real passion for trying to sort of liberalise people's perceptions of markets. So in today's session, what we're going to be doing is we're going to be doing something I like to call Beat the EA. Okay, it's a perfect example of why certain people perform differently to others when we are actually trading in the markets. The concept of this is very, very simple. We learn a very basic strategy that we'll learn in this session, and then take a couple of volunteers, 2 or 3 volunteers, and we will actually do a little bit of a trading competition using a chart that we have set up. And we will also be going up against a purely mechanical system that trades a potential strategy. And the idea is it's to highlight why, we all maybe have the same system, but some of us will perform better than others. It is something that I have done in the past, and I do it, as I say, with a lot of the guys that I work with. We actually have a very, very good group, and one of the things we do, and I'll just pop it open for you now, is we keep a log of our results. Basically, you should be able to see this on your chart now. We can see that we take a few guys, and the idea is we see how each of us perform, and we all trade in the same system, but we all have a little bit of discretion in the system of how we use things. And there's a little bit of psychology that comes into it. There's a little bit of money management. There's also a little bit of sort of game theory, maybe, which can be applied into trading. So that's what we're going to do in this session. And as I say, there will be prizes up for grabs at the end. But before we begin, I'll start with a disclaimer. Spread bet in FX and CFD trading carry a high level of risk to your capital and can result in losses that may exceed the initial deposit. The trading of these products may not be suitable for everyone, so please ensure that you understand all of the risks associated with trading. Information and comments provided herein under no circumstance are to be considered an offer or solicitation to invest, and all information is provided and is believed to be accurate at the time of production. As well as that, guys, nothing herein should be construed as investment advice. Information provided within this room is the personal opinion of the moderator and not FX Street or Trademo. This content, therefore, does not constitute financial, investment or tax advice, and Trademo and FX Street accepts no liability for the content of or comments made during the session, guys. So right in front of you now, you will see a chart, but in a second, you should see my little slideshow. And as I've said, today's session is going to focus on Beat the EA. Okay, it's a game that I've created. It's something that I do with a lot of guys. And the goal, as I said, is to highlight practically where a number of traders with systems perform differently. It's also designed to hopefully show that mechanical strategies are generally, substandard, at least in my opinion, compared to discretionary strategy. Discretionary traders are the ones that generally have the longest life cycles, unless you obviously adapt. And again, just bear in mind that this is a sample session. Optimal results are generally shown over a series of exercises, but you will hopefully see as we progress through this session that, people's differ, as we can see, with this Excel spreadsheet that I've put over. We've got a few users here and myself, and we can see that in the different weeks that we have done this, generally I pick sort of a same sort of 6 or 7 guys to do this initially. You can see that performance greatly differs from user to user. We can see, some guys will lose a lot, some guys will make a lot, and then the prior week we can see sort of break even. The mechanical strategy does well, and this is the whole purpose of this exercise. It's also a good insight to actually learn the basics I'm going to be teaching today, guys. And that basic strategy is the double SAR. I don't know if any of you have heard of that. Any of you heard of the basic SAR strategy before, guys? Anyone at all? Because if you have, that's good, but I will take you through it so that we can actually do the competition. So basically with this exercise, okay, there are some rules that we have. And again, as I say, there are prizes at the end of it. They are sort of secondary to what we're trying to achieve here. You know, I'll be asking you some questions on why you've entered, giving you insight into maybe how I trade as well. And the rules are very, very simple. You must take at least one trade. To win. You can trade using only the strategy signals that I'm going to provide. Remember, it's about showing why a mechanical strategy differs in performance from person to person. And you do have some leeway though. When we get a signal that's generated, you can decide whether to enter or exit the trade, but you have to enter within 10 candles of the signal. That is basic premise of the strategy itself. So, you know, if there's a buy signal generated, you haven't got to enter into a buy, but it has to be a long signal. Again, we're not doing a competition against each other to see who's the best trader. We're highlighting, you know, differentials in performance. Now, the winner is the person who has simply the highest amount of pips at the end of the competition. However, there is a twist. You do have to beat the EA. Now, the EA has been rather nicely named by guys that I do this with. They've called him Stig. Now, Stig is a purely mechanical version of the strategy, the very easy basic strategy that we will learn in this session. So you can almost think that this session has two reasons: teach you a session, basic decision support tool, and actually have a little bit of fun and highlight, you know, a very basic trading concept that everyone should understand. So you have to beat Stig. Okay, I'll also be taking part in it just for the fun, and there is a bounty on my head if you do beat me as well. So we will be doing this. However, I suppose we want to look at the prizes. There are prizes up for grabs. Do you want to win, guys? They are trading related. They are aimed to obviously help you guys trade. Who's interested in learning what they could actually win with this? And again, I am going to need audience participation here. I'm going to probably need 2 or 3 volunteers. So again, if we could take CC Royker, potentially I'll use you then. So guys, if you're interested, just give me a plus or minus in the box, or a me or a yes if you'd like to take part in this competition. It's very, very simple. It's very relaxed. And as I say, there are some pretty nice prizes up for grabs at the end with regards to what you can win. So at the moment, we have CC Royker, FX Boyke. Are you interested in taking part? Manoj Chopper, John Savage, Florian, Fernando, Eric, B-Man, Sandy, anyone? Manoj would like to take part. Okay, guys, FX Boyke. So there you are. We've got our 3 volunteers for this. Okay, that's what we'll be doing. But don't worry, guys, if you don't actually take part. It's an interesting exercise to stay and watch. And the prizes are very simple. If you beat the EA in this competition, and again, remember, we are learning a basic strategy and decision support tool first and foremost, and we are highlighting performance first and foremost, but it's always fun to have a prize at the end of things. You will win a 30-day silver status to Tradimo, which gives you access to a number of excellent pieces of content. We will also have a little bit of a prize given at the end, because again, if you haven't taken part and you have stayed till the end of the coaching, you know, I think that you should be rewarded for having to listen to my rather boring voice that you have to listen to. So that you will actually have anyone in the room will have potential to win a 30-day gold status to Tradimo as well. So, you know, very, very good. Lots of access to learning content then. Now, basically, let's move on to the strategy. How many of you have ever heard of the double SAR strategy before? Anyone at all? Nope, says Eves. FX Boyke, heard of the single? Well, the double SAR strategy, guys, is actually a pretty awesome decision support tool, and I'm surprised that none of you have heard of sort of variations of this. It's very, very much not a single trading system. Okay, it's something that's designed to help you find market direction and give you signals to close trades. So it's a good way to trail stops. It's also a good way to actually enter into a market. Now, what we're looking at here is very, very simple, and we'll look at it on the chart in a second. We have 2 SARs instead of 1, and it's very, very simple, this strategy, guys. The idea is that we're going to use both of those SARs, line them up, and actually trade with those signals. Now, it's worth noting that you should never, ever, ever trade with the SAR itself, the double SAR, but it's something you can incorporate into your strategy. So if you have a trend following strategy and you trade breakouts, it's a very excellent strategy, guys. It worked very, very, very well for me in the past. Again, a little bit of discretion is needed, in my opinion. because it's maybe not so good in a ranging market. For example, we all know it's a trend for the parabolics are, and for that reason, like a moving average generally doesn't work well in ranging markets. But as the awesome traders that I'm sure you are, you're probably aware of how you can make sure that you don't get yourself caught up in ranging markets. So as I've said, the tool itself, okay, is designed to help you with entries. Okay, it relies basically on one SAR. Now, this is known as the directional SAR, and this is the SAR at the bottom that I've highlighted for you. This SAR, I set it generally to 0.0005 just as a base mark, but you can set the SAR to anything else. Now, the idea is that this SAR should be a long-term SAR signal, and the reason we don't want this to be sort of a 0.05 or a 0.02, can anyone think why? Something that we're using to gauge market direction, why we want it to be more long-term? Any ideas? And again, if we just pop a chart open, I can highlight to you perfectly. Why do you think the SAR is important to have, not maybe a 0.05? If we're trying to gauge the longer term trend in the market, what do we think? Yeah, absolutely, the trend. The problem you've got with a shorter term SAR is, look at this, massively, massively short here, guys. Look at this, is ridiculous. The trend or the direction of the market changes every 2 minutes. So the idea is, by setting it to a longer time frame, you, in theory, should catch the longer term trends. For example, we can see a very, very nice example of where we break out in the market, retested the double SAR form. And look at that, guys. We went on side at as much as 85 pips. You would have taken 19 pips just using that SAR. So that's why we have the longer term SAR. It's very, very simple. It's not rocket science, as I'm sure you're all aware. Now, if we pop back to the slideshow and just crack on with this so we can actually get cracking with sort of the exercise itself. Okay, the second SAR is the signal SAR, and for argument's sake, set it at 0.005. That's how I want it, guys. Okay, 0.005. Now, the signal SAR is something that we're trying to gauge more frequent entries. If we had two SARs that were too far apart or too close together, in terms of their direction and what we do, what you're going to end up with is you're going to basically end up with, and hopefully this works, something that gives you very close signals together. What we're actually looking for is something they give us shorter term moves. So the 0.005, mark it in green. And it may, get you into some false trades, but using it as a decision support tool, so identifying when a market is consolidating like we can see here and deciding not to take the trade, is important, but we're trying to just take advantage of certain moves. So we can see we have a down move here. Okay, that's telling us we should be getting short because we're above market, and our signal SAR lines up on this candle here. Obviously, that looks like it's a bit of news. And what happens? We come off 60, 70 pips. You get out for 56 pips. So again, it's also to do with money management and the stop loss. And the basic premise, as I say, is very, very simple. Okay, what we're looking to do with this strategy, is we're looking for bullish and bearish signals. And it's very, very simple, guys, as I've explained. A bullish signal is generated when your direction and your signal SAR line up. So looking for both dots to be above market. A bearish signal, very simple, is when both dots are below market. And I'm going to be teaching you the very basic one here because it works better in the exercise that we are doing. So what do we do when the SARs do not align? We don't take the trade. So ordinarily with parabolic SAR, with the green, ignore the red for a second, we would enter into a short position when the red SAR gets broken and we move above market. We would then enter into a long trade, move into sort of what is known as an uptrend. But with the double SAR, basically, you have to have both of these things together, guys. If you have one up, so if the direction is up and the signal is telling you, in this instance, it's telling you it's above market, it's telling you to get short, and your signal is telling you to get long. You don't look to take the trade. And the idea is what we're trying to do is we're trying to filter out periods of consolidation in the market. So again, good example here in sort of the euro dollar, guys. We're having a little look. There you go. We break down into a trend. We then hit a consolidation period here, and we don't want to get into that trade at that point. Obviously, the market does reject it in the end, and the trend changes. But we're trying to avoid these big periods of consolidation where you get sort of chopped to pieces in the market, like we see here. If we just scroll back, lots and lots of signals. There'll be a buy signal there, a buy signal there. All of those could be depending on how you take profit. And again, this is why it's important, as I say, to use this as part of an existing strategy, because again, look, if you were to buy every time you got a direction up, looking to buy it, unless you have something specifically in place for profit taking. In this example, we can see that basically what happened. We're in a downtrend there, so we look to buy it here. You take a loser. Whereas when we break out from the range that we're in, we can see we break the high, we enter into an uptrend. There you go, guys. We get a nice 58, 60 pip win. So as I say, very, very important, guys, that we do this, okay, during the session. Reiterate that it is a decision support tool. So moving back to the double SAR, okay, it's very simple. When the SAR is aligned, we look to enter the trade either on the actual break of the SAR or on the close of the candle itself. So in this example here, we can see that the red and the green both turn at the same time, which is quite unusual, and we get a big red candle. So in this instance, the red line, you would either enter sort of around the candle, but generally it's on the open of the next candle, or you can filter it for, maybe one or two candles to avoid sort of getting caught on a pullback. But generally how we'll do it today is we break the SAR, we enter into the short trade here, and we hold that short trade, if you're using it mechanically, until the green SAR here, the direction SAR, is left untouched, but the signal SAR crosses back to give you a buy signal. And again, your stop loss, as I've said, is very, very simple. You look to basically pop your stop loss onto the SAR itself. There we go, that's better. So your SAR in this example, when we get a short signal, you'd be short here. Your stop loss would be above here. Track that down. And again, I advocate not always holding the SAR until you get down to this point. I would actually be looking to take profit some of the way down. And again, that's why I believe discretion will beat the mechanical strategy. So guys, what setting is the shorter SAR? The shorter SAR is 0.005 FX buy key. Yeah, 30-minute is very, very short term, but again, it's just to highlight, otherwise I'd have to have candles there that are very scrunched up and you wouldn't be able to really see what you're doing, and probably have to wait a long, long time for trade signal. Any longer term, sir? You can go upwards to 0.0009. I generally hang around the 0.0005, 0.005 because they are multiples of each other. And again, it's important, maybe test it out, see what works best for you. But for me, it is part of the decision support tool. So how I use this is I wait for the market to break out from a level, okay, that I may have marked up on my chart. I look for volume, and I then look to enter in the direction of the SAR if possible, and potentially track my stop loss using that SAR. But we're here to learn the mechanical strategy so that you guys can take it away and play with it. And we're also here to highlight that strategy, as I say, with the BEA game. So basically, guys, Eves, FX Boyke and Monoj, are you ready to play this game? Ready to play the competition? Remember, there is a prize up for grabs, and the idea is that, it should stop you from, it should reflect accurately how you trade. Ready to play the competition? And again, it's a good way of highlighting how people do. And we will go through some points as we go through. FX Boyke, Manoj and Eves, I do need you to just respond to me if possible, so that we can crack on, obviously. And remember, guys, at the end, we will have a bit of a raffle as well for everyone in the room, just to make it fair for everyone who hasn't taken part. So let's pop onto the chart, shall we? There we go. We've got our chart set up now. Now, I'm expecting everyone to be very, very honest and not pull up a chart and try and chart, but it doesn't matter because I'm using a different broker to probably use. So very simple, guys. The rules are, as I've said, you all get a name tag. So we've got FX. I'm going to call you FX Boyke. We call you Eves. I'm going to call you Y. And I'm going to call you Man. Okay, there we go. So we've got 3 names. Okay, now, as well as that, I'm going to be taking part in this as well. And again, as I say, there is a little bit of a bounty on my head, if you can beat me. Again, trading related. So there we go. We're also going to be playing against, as I say, the EA. Now, the EA himself, called Stig, he basically Okay, or it basically will take every single trade signal that it gets. Okay, I don't do that. I use discretion. I would hope that you guys use discretion as well. So there's Stig, there's FX, there's Y, there's Man, there's Jack. And I've put a couple of indicators just on the chart for you guys. So if you use volume, if you use RSA, that's fine. You know, things I like to use is check to see if we're at a level when we get a breakout and so on and so forth. So I will mark some levels up for you on the chart. But predominantly, it's one, to help you learn the strategy, and two, you know, to show this why discretionary and others. No, it's not a buy right now. You cannot decide when you want to buy. You have to, when there's a trade signal, you do have to actually trade it in with the mechanical strategy. Is again, the highlight is to show the differential in trader performance based on discretion. So here we go, guys. You ready to begin? So we're going to begin now. When we come to the chart here, guys, you can see that we have a 0.5 SAR. That tells us we should be selling. At this point, though, you can see that the signal to actually buy is there. So basically, we ignore any of these signals. So we move along, okay, candle by candle, and we're waiting for either the yellow to get broken, so it aligns with the green, or the green to break to align with the yellow. And as you can see, we have a very nice break now. This here is a buy signal because the green and the yellow dot have now broken. So, guys, you have a choice. Stig, who is the EA, is going to be entering into the trade regardless of whether there is a level there, whether we're overbought, oversold, or regardless. He's actually going to be entering into the trade. Again, the choice is yours now, FX Boyke, Manoj, and Eves. Eves, Manoj, FX Boyke, and sorry, I forgot CC as well. So CC, would you like to enter into the trade? No. CC, what about you? Just give me a plus or a minus. FX Boyke, the same. The buy price is this line here, 92.44. Basically, don't worry too much about the buy price itself. The idea is the overview of the chart. So you would like to wait. What about you, Manoj? And again, I just put a time limit on people to respond so that obviously we don't slow down, because we like it to be quite fast paced. And again, get as many results as we can so we can look as to why results differ like this. So Manoj seems to have disappeared, so he won't be involved in this trade. Boyke wants to wait. Why would you like to wait, Boyke? CC Royker would like to buy. Would you like to buy, CC? To match. The two do match, FX Boyke. And again, a good way to learn the strategy. Maybe I'll start you off. Stig's getting involved here. I'm not going to be buying at this price. And the reason I'm not going to be buying at the price, despite the fact I have a signal, is RSI is overbought. We do have quite a big uptrend on volume, but there is a level on the chart that I'm interested in. This level here, very, very important. Okay, you can see for me, I'd rather wait till we break out from this resistance before I enter into the trade. Yeah, absolutely. So as it is, it looks like no one wants to buy at the moment. Is that correct? Manoj seems to have disappeared, so we'll just crack on. So Stig is in his trade. His stop loss will track the parabolic zone. And you can see how the system works as well, guys. As I say, there's a twofold reason we do this session. Let's move along. There you go. We get a shooting star. Now, again, you have a choice to get in, guys, within the first sort of few candles if you want. For me, definitely not entering into the trade there, will we, guys? Because, you know, Stig's in the trade now. Now, if it was a mechanical system, they hold the trade. For me, clear indication that the market wants to reverse and maybe there's a better entry level. Or again, you know, the fact that we have the level there makes me think that I don't really want to get involved in this. Absolutely, Sandy. We don't want to get involved here, do we? So we move along. Okay, does anyone want to enter the trade still at this point? At this point, you can see Stig's currently moving into a towards that break even. No one wants to enter the trade? Minus. What about you, FX Boyke? Just a plus or a minus will suffice. Plus will be no. Plus is yes. Okay, so we're going to crack on then. We begin to move down. We begin to move down again. I'm definitely not entering, as I say, until we break the resistance. And again, at this point, you know, look, discretion's winning. Will mechanical strategies win? Who knows? But there you go, 24. So we all have the same idea at the moment. Bang, we get a breakout. So you have a choice now, guys. You can still enter this trade. 2, 4, 6, 8, the 9th candle. So you 10 candles. So would you like to enter this trade, guys? Plus, minus? Now at this point, Stig is onside. Anyone at all? FX Boyke, Eves? Why don't you want to enter into that trade, Eves? Is there any reason for that? And remember, you have to trade at least once to win. Any reason for that, FX Boyke, why you don't want to enter the trade? Now, for me, you want to wait for confirmation, but for me, I think I'm going to enter into this trade. And the reason I'm entering in is because we have a very, very big blue candle here, guys. Now, generally, when you break up to a level of this sort of standard, and it is pretty decent resistance level, you can always wait for the next candle. We've got a very big Yosen candle there. The volume is much bigger than the prior candle. We are slightly diverged, but I'm going to just give it one candle and see if we move through. The red line is the stop loss, where you track your stop loss to. So you'll see FX Boyke as we move along. We've tracked back down. The stop loss moves with us. Now, for me, I'm probably going to give this another candle or so, Stig still in the trade. And again, you can just see, we get a reversal pattern. Instead of, exiting the trade and taking 25 pips, system's holding it all the way back. We begin to break higher. And at this point, obviously, guys, you can see we begin to break out. So you guys, unfortunately, have missed the long signal. It is within 10 candles. Unfortunately, Eves, there is a 10 candle rule, but if you would like to enter, I will make an exception. So would you like to enter into the trade? Your stop loss is going to be here. Now, you can decide to exit whenever you want, Eves. What about you? Oh, no, you're in, Eves. You said yes. You said yes, so you're in. I'm going to let you in to the trade. What about you, FX Boyke? Plus or minus, mate? Would you like to enter? Minus. Okay, so no reason, any reason for your entry, not refusing to enter. I think that's a good breakout myself. So I'm going to be monitoring things. You'll see that I've entered. I'm going to be looking now because we are overbought. And remember, generally for me, when we break out of a level, I look at the 80 to 85 level. So if we get up there, I'll probably exit from the trade. Okay, we get a move down. So if you want, Eves, you're currently in a trade. If you want, you can get out and lose for 15 pips, or you can try and hold it all the way back. Absolutely, Sandy. Prices making higher highs. The green at the moment that's our resistance level. Let's move that out of the way, shall we? So, Eves, do you want to hold the trade? Again, remember, use a little bit of discretion. If you want to get out, you can get out. If I want to get out, I can actually take a profit of 10 pips. And generally, in this market scenario, I've got my stop loss here, obviously, like the Stig has, but I'm probably going to wait to see if we break below this level, and I will exit for a very small loss. So, taking that as a no, and I'm taking it that Eves wants to get out. Okay, so Eves, you are out of your trade. You lose 14 pips on that. What was your reason for exiting? 15 pips, sorry, Eves. What was the reason for you exiting from that trade, Eves? And again, very interesting because we sort of build up a little picture of what the traders are over a few sessions, and then I'll tailor a session towards them if they have a psychological issue or something. 10th of Jan would have entered. 10th of Jan back here around this area into a short on the start. Yeah, that looks good. Again, we don't know what levels are there, but generally that's a good breakout, especially. Yeah, you're absolutely right, but we might get some more signals, so let's crack on. Unfortunately, Boyke, you can't enter now. You've got to follow the strategy. Again, the idea of this, guys, I can't stress this enough. We all trade the same strategy. We all have differing results in theory. So we move along. Again, it highlights the impact of discretion and helps us learn the strategy. So we move across. Okay, we get another trade. Now, at this point, I'm very much happy to hold the trade. Okay, Eves, you've got out, unfortunately, for a bit of a loss. It has actually come back. The Stig's still in. I'm still in. And I'm going to hold this pretty much, I think, guys, till we go below. So we carry on moving along. We move higher. That's good. That's good. Now, obviously, I'm looking for a reversal signal within the market. Now, at this point, we move along. I'm in around a break-even area. Now, if I have a little look at the chart, I can see that there is some more divergence creeping into the market. I can see that there's a little bit of a tweezer top forming if we take this out. So a bit of a bearish engulfing pattern forming there. And at this juncture, I'm on side about 56 pips. At this juncture, Stig himself is on side about 78. So I'm probably going to lock in my profit on the next candle if we move down. Again, probably going to hold the trade using a bit of discretion, unlike Stig, who's just going to run it all the way up. Okay, so that's me pretty much looking to hold the trade, as I say, till that green level goes. Okay, that's me getting out. Oh, excuse me, fat fingers. So I get out here, I close my trade. So I close my trade at this price, okay? So I can see that I make about 40 pips. Stig himself, optimized, he was on side 1.90 pip. What has he done? He's taken about 55 pips out of that. So I'm up 39. And already you can see, guys, how differing ways of managing a strategy. So Yves got out maybe a little bit too quickly. Manoj wasn't in there, so we don't put one on there for him. CC's disappeared. So you can see already straight away we've got the same strategy. We have the same entry signals, but straight away you can already see that there is a performance difference. It goes on and on and on, guys, and we carry on doing this, and you'll see that the results massively differ between person to person. 40 pips is good. I'm happy with that. So let's see what happens. Although I'm a bit annoyed that Stig is in the lead here, so because I'm trying to highlight why I believe discretion is better, and also teach you this little decision support tool. So I'm going to delete. I'm just going to move that green line out of the way, guys. I'm going to delete that green line. And now what we have is we have a buy signal with a sell signal. So what we're waiting for is this green dot to come towards the orange SAR here. So here we go. Let's see what happens. Okay, we get a trade signal. Now, in this trade, it's 1 o'clock in the morning. Now, for me, trading dollar Swiss is a bit silly. You could put a filter onto Stig so he doesn't trade at that time of day, but Stig enters into a trade. I'm going to ask you a question, guys. Who wants to enter into the trade as well? FX Boyke and Yves, are you interested in entering into the trade? No. Any reason for that? Would you not want to enter into that trade, guys? I'm beginning to see that you guys are very patient traders, which is always a big positive. So I'm going to put a purple line just to highlight the reason I'm not entering. Low volatility, yep, absolutely. It's overnight. And as well as that, you know, we have a resistance level here. And it's not just a resistance level, guys. It's a resistance zone. Okay, now for me, that is a bullish consolidation pattern. But at 1 o'clock in the morning, don't really want to be entering the volatility, though. I'm going to wait for the breakout to occur. And again, you know, be a little bit conservative. So we can see that Stig's entering into this trade. So he's the only one entering. We move down. So does anyone want to enter the trade now? No, I'm definitely not entering. I presume Boyke doesn't want to enter there. We've got a little bit of a top forming. We begin to form a top. Right, so we break out. So actually, who wants to enter into the trade now? You can enter into the trade if you want. Stig's in a little bit earlier than us, but it doesn't mean that the trade's going to go on side. Plus. So Yves would like to enter into the trade. What about you, Boyke? Would you like to enter into the trade? Yeah, generally speaking, it's sort of up to the individual. Exactly. You can see, Sandy, why certain people would react. Like, you'd be more conservative with your entry, so your performance would differ. Boyke and Yves want to enter into that trade, so that's fine. You're both in. Stig's already in. For me, I think it's a breakout, but one of the things that I'm a little bit concerned with is this big divergence in the market. We are moving up to the 70 and we're in a consolidation. I'm going to wait one more candle and see what happens. If we sort of stabilise above this purple level, I will enter it again. More like Sandy, wait for the retracement maybe. Stig doesn't care. Stig's in the trade. Okay, we move down. So, guys, we formed a tweezer top in the market at your entry. Now, it's up to you what you do here. Okay, but your 15, you can take a 15 pip loss, or obviously just keep holding the trade and deciding what you're going to do. So, FX Boyke, plus or minus? Are you staying in the trade? Plus to stay in. I'd trade now, says Sandy. I don't think I'm going to be trading this with that tweezer top forming. I'd rather have a hammer on the level, if that makes sense. So Boyke wants to hold the trade. I'm presuming Yves would like to hold the trade and hold it regardless. So we move down. Okay, so we're basically broken back into the range. Now, this is a good point. Stig doesn't seem to be able to see that we are within a support and resistance zone. And any mechanical strategy you use, there's only so many sort of indicators you can put on before it starts going mad. Trust me, I've tried it. So, guys, you got a choice. You can bail on the trade early and save yourself, another 20 pips if it goes wrong. and lose 30 pips, or you can actually hold the trade if you like. Up to you. If it was me, I'm not going to try and influence you. Boyke, you staying in, plus minus? Hold till knocked out, Boyke. Yeah, there is an argument to say. So that guys, is a good site. That's a psychological thing. There you go, guys. First psychological thing we can see that Sandy has. He comes to he not dejection, but he accepts the fact that he might get knocked out by this. So, why lose another 22 pips? Wrong way to think about things, Sandy. You know, as a trader, you've got to think: is the reason for me being in the trade still valid? Probably not. Probably get out of the trade. So, okay, so Boyke is going to hold his trade. We form a little bit of a hammer. So I presume everyone's going to be holding it there. We come down. What happens? We move back up. So, guys, here's a good psychological one for you. You guys are now just 14 pips away from even. You're holding this trade in place. Stig's holding his regardless. Remember, he's not done by emotions or anything. So Yves and Boyke are both holding. We move up. Okay, so you've seen the trade offside a lot. We still haven't broken the high. So for me, the reason for being in the trade isn't there. So that's why I'm not in. But, you know, are you going to hold the trade, guys? 8 pips is the loss you can take if you want to get out now. Plus, so everyone's holding. Okay, we move in. We move back up. Still holding the trade, guys, as we move along. Yeah. Okay, and yet another rejection of the level. So for me, you know, this is a little bit of ego and stubbornness coming in. We're still within the range. 12 pip loss, guys, still holding. We're clearly in a ranging market for me, and I know that this system doesn't work well in a ranging market. So Boyke would like to get out. So Boyke, you're getting out here, and you're getting out for a 25 pip loss, or was it the candle before you wanted to get out? Candle before, so I'll be nice and fair. 11 pips. So feeling nervous now. This is it. This is the whole point, guys. You know, emotions will get the better of you sometimes. So FX, you are minus. Where are we on this candle? I got you out. I think you're minus 11 pips there. There we go. Stig's still in the trade. Yves is still in the trade. Time zone now. This is CET +1. So we move along. Still holding the trade, Yves, even though the market's clearly ranging and we know this doesn't work well enough. Okay, holding it till the end. Or we break out. So you have a choice. You've seen it offside so long. 8 pip profit if you want to take it, Yves. Now, bear in mind, there's a new resistance level forming. Again, FX Boyke, you're actually out of the trade, FX Boyke. You can't enter. You can only enter on the clear signal with the SAR. You only enter the once on the SAR. But if you want to enter again, you can enter on the buy. Would you like to enter, Boyke? Yves wants to hold it. Boyke wants to enter again. Okay, so we pop another line on the chart. Did I say I wanted 5 lots? We're all mythically, it's pip value, not amount of money. Wink, wink, smiley face there for me. So trying to a little bit cheeky there. So we break back down. Okay, FX Boyke. Yves, you have a choice. We're refusing to break this level, guys. I don't know why you're holding the trade, but again, discretion in the trade. 2 pip profit if you want. Yves, Boyke, you can take a 9 pip loss. And again, we move the stop loss up. Stig's still in the trade. You've got 3 seconds to answer. Otherwise, you're staying in the trade, guys. 3, 2, 1. Yves is out. Mike FX is entering the trade. Technically speaking, Mike, you're not in the competition, but play along with us. So we go along. Okay, we move higher. Profit. Holding it, guys. 3 seconds, 2 seconds, 1 second. Give us a response quickly so we can crack on. I want to try and get 3 trades. 11 pips if you like it, Yves. And again, 11 pips might be enough to win the tournament. No? Okay, so everyone's in the trade. Yves is already out. Ah, of course you were already out, Yves. Yes, you were. You were out for here, were you not? Out on the blue candle. Apologies there. Missing you with all the action. So Yves actually made 9 pips on that trade. So Yves got 9 pips. So Yves is now down 4, 6. Boyke, you're still in this trade. I've let you go in a second time. You're holding this. All right, Sandy, you're welcome to take over for him. FX Boyke's still in his trade. We move up. This is interesting. We move up. At this point, you're now on side. We've broken out. Now, the signal was given too long ago for me to want to enter the trade, but we're looking quite good. You're 20 pips on side if you want to 23 pips on side, Boyke, if you want to exit now. Remember, there is a prize up for grabs. We are at 70 on the 3 seconds, 2 seconds, 1 second. Okay, you're holding the trade. Tweezer top. What do you want to do now, Boyke? Again, for me, that's a big reversal pattern. Stig doesn't see the tweezer top, but for me, that would be a clear fire away from it. Clear reason I exit for 60 pips if I was Stig. You, on the other hand, Mr. Boyke, can take 11 pips to you, sir. So he's holding the trade. And again, we've got someone who's fairly aggressive. We're holding the trade again. We're holding the trade. We carry on, just moving along. Okay, we move down now, Boyke. So actually now you were offside with that trade. So are you interested in holding this still or taking the loss? Still in. We move along. We move down. And there you go, get stopped out. So we can see there that Stig actually gets stopped out for pretty much, I think it's about a 5 pip loss for Stig when we cross the line. So Stig loses 5 pips there. Again, he's now plus 85. Boyke, unfortunately, you're out regardless of this candle. You've got to get out because the SAR's crossed. That's a 39 pip loss for you there, FX. So that puts you down 50 pips. And again, you can make that back with one trade. I'm still on 39. Sandy's taking over for Manod. So we carry on, guys. We look for another trade signal. Let's get rid of these lines. And we crack on. So we're looking for a buy or signal. Still no signal trade. The SARs haven't crossed. SARs are crossing. Okay. Quite generous. Because of my fat fingers, you've got a buy signal, guys, on the chart. Who wants to enter into the trade? Now, I'm going to let you actually enter in here, even though the Stig has entered here because of my fat fingers. I've missed a trade. Let's say I was out to lunch. There you go. You can enter here if you'd want. Boyke doesn't want to, Eves doesn't. I'm definitely not entering into a trade. Sandy does. Okay, so why do you want to enter the trade, Sandy? Quite an interesting question there. I suppose it's a pretty risk-free trade, but that shows a little bit of ego in the market. Support, we are on a bit of support. You are absolutely right. For me, we're in a range though, and I know this strategy doesn't work in a range. Stig's in the trade. Stig's actually in the trade at this point, guys, because that's where the SAR broke. It was just my little fat fingers that stopped us from doing that. Also, guys, you know, the volume's getting lower. We've rejected back into the range. There was a buy signal. Still in the trade, Andy? Happy to hold the trade? Okay, carry on. We move up. So at this point, you're actually in profit. Still want to hold the trade? 9 pips, you're in profit, Sandy, using a bit of discretion there as well, around that support level. Stig's currently offside. Oh, dear. 20 pips, still in the trade. We move along. We break down. What about now, Sandy? You've got a choice. You can take a little bit of profit. There is a little bit of a resistance zone forming. 5 pips if you want it. No, are we still in? Okay, move along a couple of pips. We move back higher. So a good support level. For me, I'm definitely not getting in. We're in a range. We're moving along. Yeah, there is the SARs there at the orange, Boyke. We saw it cross before. Need to pay attention, my friend. So, guys, what do you want to do now, Sandy, at this point? Stig's staying in the trade. We're clearly in a range. Doesn't want to be doing this. He wants to hold it. So we move along. We hold it into a break even. What about now, Sandy? Plus or minus? Minus means you want to exit. Currently on side, about 30 pips, looking for a breakout. Oh, we get a doji. Now, for me, I'd be out of the trade there. And again, just a bit of discretion. Yeah, I think it's a bit rangy as well. Stig can't identify. I'd be in and out. I'd be buying and selling and selling. So you're holding the trade, Sandy? Okay. Okay, we're creeping back down. What about now? Okay. Sandy's holding it, so I think he's holding it till the end. And there you go. Stopped out there, Sandy. So you're okay. You're actually stopped out for probably a very, very, very little. In fact, I think you've made a little bit of few pips there. So go on, Sandy. You've made 2 pips. Were as much as 45, 30 pips on side. So Manoj, who is actually Sandy, you're on side 4 pips. Stig, on the other hand, a disastrous performance. And again, range in market. What happens to the Stig? He sees a trade on side 40, 50 pips. Because he's tracking the SAR, he actually ends up losing quite a few pips there. He ends up losing about 33 pips there. So the Stig comes back and loses 33 pips. 85, 52. There you go. So at this juncture, Stig's actually still in the lead, but you can just see how in a ranging market, Stig would get killed. Right, guys. So unfortunately, we've had 3 trades. We are near the end of the session now, so I am probably going to have to wrap things up here, guys. But this exercise, very, very, very good for showing you why discretion is in the markets. Now, I would like to do this as a continuing thing at sort of the end of FX Street sessions. We can see that Stig wins with 52. I'm in second with 39. FX Boyke minus 50. Eve minus 6. And Man plus 4. So already you can see the differentials. We have the same strategy. We have the same signal to get into a trade. But look at this, guys. You know, Stig gets into every trade. And I guarantee you, let's have a little look, shall we, at what happens on his next trade. Okay, we get a short. It breaks out. He sees it all the way back for a loss there, whereas probably me as a trader, down to 15 on the RSI, on the RSI, I'd exit. So, you know, it just shows you that, you know, different performances based on what we do. Now, it's a very interesting exercise over a course of a period. But, guys, unfortunately, we are at the end of the session. I cannot believe that FX Boyke, Eves and Manoj, otherwise known as Sandy, let him win again. He's a formidable opponent, the old mechanical EA, but he has had potentially the worst result ever in our setting. So, you know, that shows you over time, mechanical doesn't always work. So, guys, in terms of the prizes that we talked about, okay, because I'm such a nice guy, even though you didn't beat the EA, okay, I'm going to give the silver coaching to one of the guys. I'm thinking of a number between 1 and 10. Closest that person wins. So everyone who is in the room, Sandy, everyone who has taken part, we'll have a separate raffle afterwards for everyone in the room. Everyone who has taken part. Sandy, what about you, FX Boyke? Between 1 and 10. 2. Okay, what about you, Eves? 5. Okay, guys. Very close. My lucky number, guys. My lucky number is number 4. Therefore, Eves, you've actually won that silver status. Congratulations to you, mate. I will pop a link to where you need to go to. In fact, I tell a lie. Here's my email address. Send me an email address. I will send it to you as a personal message in a second. So you've won that. But, guys, don't go away. We've still got another prize to give. We've got a gold status to give away because, you know, you guys have been great and we've been stayed and obviously you've hung around. We do have a gold status to give away. Now, we are having a raffle. I've taken everyone within the list and I'm randomizing it. And let's have a little look who we have in the session, shall we? So, scrolling down, eyes closed, eyes closed, eyes closed. Right, do we have John Savage in the room? John Savage. Okay, John. So again, basically, I'm going to be sending you guys a message, so just stay with me for that, guys. If I can work out how to PM someone in this software. 1 second. I believe it's just a case of there we go. Yeah. So, right. So, John, I've sent you a link. Okay. Send me a message to that email address and I'll sort your prize out. Eves, I've done exactly the same. Send it specifically to that email address and I'll sort those prizes out for you guys. So thanks ever so much for attending. As always, this session has been brought to you by FX Street. Absolutely fantastic site out there, guys. Absolutely love FX Street. It's also been bought in conjunction with Trademo, which is our sort of learning school. It's our trading education school. We've got lots and lots of things in there. We've got a live trading room with 25 hours of sessions. We actually have free money promotions like free 100 just for signing up so you can start trading. We've got lots of education stuff as well, guys. You haven't got to actually sign up. You know, we've got a very nice community. We've got lots and lots available out there for you guys. We've got, you know, a nice status system so you can earn points to actually unlock lots and lots of different content, courses, strategies, you name it. We've got it all, guys. So make sure you check us out. I will give you the link to the site if you are around and you do fancy checking out the site. I'm around all the time. If anyone wants to contact me on Skype at all for any reason, maybe they want the slide deck of the parabolic SAR, again, you can contact me via Skype. Here is my number and here is my email. it's a different that. So, guys, make sure you contact me, John and Eves. Everyone else that's attended, I'd like to thank you for attending, and make sure that you come to my next session, guys, because we'll be having more sort of exercises like this designed to show sort of different sort of aspects of trading. Right, guys, I think that's about it from me. Again, feel free to hook me up, hook up with me on Skype or my email if you want the slide deck for that double SAR support strategy. I'll catch you later, guys. Bye-bye.